So hi guys, it's SJ speaking, and in today's video we're going to see about support and resistance. This is also a technical analysis video. So support and resistance is one of the important concepts in technical analysis. So it's an easy concept to learn. So even for beginners. Coming, what is a support? A support is a price point on a chart where demand for a stock is likely to increase. So it's the level beyond where the stock price finds difficult to decrease further. Suppose if the stock price increases, it comes like this and it falls below and it finds an area where it takes support and it goes up. The buyers are increasing here, the stock price goes up, and again the stock price comes down, and again the stock price does not decrease beyond this level. So there is a demand for the stock at this point, and then again the stock price comes down and it goes up. So it doesn't fall below a specific point, so we can draw it as a line and you can consider it as a support. So you might, so the stock price might go up and come down here, and it also goes up and come down here. So it might be like this. So this is the place beyond which the stock price finds difficult to decrease further. Why it finds difficult? It's because the buyers are once it comes to this point, the buyers are buying the stock. So there are orders to buy this stock. There are limit orders to buy the stock, pending orders, or the buyers put some market orders here and they increase the stock price. Why? Because the buyers feel the stock price is cheap here. They find it cheap here. They find it as cheap here. So they find it as a good point to buy and they buy the stock. They do not, the demand for the stock increases there. The buyer's interest increases there. They do not allow to decrease it further. So this is what support is. Suppose if the support gets broken, then it is called as a breakout. How to confirm a valid breakout? You might see the candlesticks. The candlesticks body must keep a close. The wicks alone must not keep a close. So this is wick and this is body. So it is also known as shadow or shadow. You might, if you don't know about candlesticks, watch my candlesticks videos, basics of candlesticks part 1. So you'll get a brief idea of what body and wick is. So candle body should close below this point. So that is considered as a valid breakout. And also the candle must be a high momentum candle. So body close is a good reliable point, but still more reliability depends upon the size of the body. If it is a high momentum candle, then the reliability of the breakout is high. And thirdly, this is the first thing, body close and high momentum candle, the body must be high. And the third reliability, another confirmation, another point for high reliable is high volume. The volume should also increase. So in this case, if these points get broken, then the selling side volume should be high. So I will say how to look at the volume in the upcoming slide. So you can see this is how it works. So this is what support is. So example of support is this. So the stock price increases here and it again comes here and finds a support here, and it again goes and finds a support here, and it again goes and finds here and support here, again finds support. So it finds the why it finds a support, because the buyers are buying here. The buyers find that the stock is cheap at this point and they are buying the stock. So once the support gets broken, that is in here, you see the candle is a high momentum candle. Also the candle's body gets close below it. So candle's body must close and it also be a high momentum candle. So two reliable points are there to confirm a valid breakout. The third reliability, the volume is also high, means that is a high reliability. Usually at high momentum candles, the volume would also be high. But sometimes when the volume is also low, you can take orders. It is only a high or another confirmation to take orders. So the breakout traders usually enter here and keep stop loss here and targets here like this. So this is an example of support. And next thing is resistance. It is a price point on the chart where supply for the stock is likely to increase. So it's the level beyond where the stock price finds difficult to increase. You see here, there are multiple rejections of price to increase beyond this level. So you see multiple rejections of price to increase. So this is the price getting resisted at this point. So what happens here is that the sellers are selling at this point. Though the buyers are finding, the buyers want to take profits at this point. They are seeing that the stock is expensive here and they are selling it to others. So the new short sellers, they also find the stock price as expensive and they are selling at the expensive prices. and they buy at low prices and take a profit in case of short selling. So this what happens here. The supply for the stock increases. So selling pressure increases here and the sellers bring the price down at this point. So keep the limit orders here and stop losses here and targets here. This is what happens here. So this is the resistance level. It is just the opposite of support. So this is the example. You see the stock price goes here and comes down and again it finds the resistance here. The sellers find so the traders find it as expensive price for the stock and they sell it and again it goes up and sells. So this is the resistance example of resistance. Multiple rejections of price to increase beyond this level. So once the resistance get broken, so this is known as a breakout. The candle's body must close and it should be a high momentum candle and also the buy side volume. In this case, it is buying. So the buy side volume is also must be high to confirm a valid breakout. It will go here, it will come like this and it will go up. So this is what comes under new concept. This is support gets converted into resistance. You see now this is the support level. Once the support gets broken, the support again goes up to the line, the support line. So the support gets converted into a resistance point. So stock price finds resistance here and then resistance here and then resistance here. So after price breaches the support level, the support gets converted into resistance. This is how the support gets converted into resistance. What basically happens here is this. So this is what happens here. You see, this happens here. So the support gets converted into resistance. So this happens here. I will give you an example. You see, this is the example. You see, this is the support zone. And once the stock price break, the candle's body gets closed in and it also high momentum candle. The volume is also usually high at this point. Then this is a valid breakout and the stock price comes again to that support line, that is the support gets converted into a resistance and the price finds resistance again and again at this point and then it comes down. Usually the sellers will keep a limit order here and they will keep a stop loss at the previous support or previous resistance in this case and will keep the targets as here or here. So this is their entry point, this is their stop loss, this is their target 1, target 2. So this is what happens. Then coming into resistance, as it is the same concept. The support gets converted into resistance and the resistance gets converted into support. It is the same concept. So you see here the stock price finds support here and once the support gets broken, the stock price finds resistance at these 3 points and once the resistance gets broken and it again finds it gets converted into a support and the stock price finds support here and then it goes up. So this is what happens. An example is given here. You see the resistance zone gets converted once it gets breakout. Here you see the candle's body did not close. So this is not a valid breakout. And the next red candle is also does not denote a breakout. The third candle's body get closed, but still it is not a high momentum candle. So aggressive traders might take an entry here and keep a stop loss here and keep targets here. But conservative trader would look for a high momentum candle such as this green bullish candle. So he will take enter here and he will keep the stop loss at this point or this point and will keep a target here. So this is the difference between aggressive traders. Aggressive traders usually enter once the candle's body get closed. But conservative traders, those who are not willing to take risk, will look for a high momentum candle. So in this case, it's a high momentum bullish candle. So the volume is also usually would be high. The buy side volume usually would be high. What happens here is this. So resistance get converted into support once the price breaks the resistance get converted into support. So this is what happens here. A resistance get converted into support. So let's go into a live chart. So you see here the some of the points. You see, sorry, 1 minute. So here is these 3 points are equally same, but this fourth point goes somewhat below, above it. So support or resistance would always not be at the same point. It can also go a little bit lower or a little bit higher. That's why support is sometimes marked as a zone. Usually a support is marked as a zone which is known as a demand zone, or a resistance is marked as a zone which is known as a supply zone. So marking the support and resistance as a zone gives you a little bit more. It is less much. It gives you better entry points, and the risk is also usually less. It gives you accuracy when compared to marking it as a line. So this is what the support and demand zone means. I will explain it in the live chart. So let's bring the live chart. So this is the live chart. Before going into the demand and supply zones, I will give you an example of. You see, this is the Tata Power stock. You see, the support and resistance always not be a straight line. It usually don't happens in a straight line as a support and resistance. It might also appears. It might also take place slantingly. You see, slant zones. So this is the support. You see, mark the high of the candle. These are the resistance of the resistance. These are the resistance, and you see the support is here. These are the support zones. So these are the support zones. So you can mark as this. So this is how trend lines and channels work. I will bring a separate video for trend lines and channels. So this is the support and this is the resistance. You see the breakout takes place here. The breakout is taking place here. Or you can keep like this. So you can the breakout. Wait. You can keep here like this. Mm. So you see, this is the candle. This is the first candle that makes a breakout. So aggressive traders usually enter here, but conservative traders wait for a high bullish momentum and they take the entry here and keep the stop loss below the breaking out candle, or they keep it here below some support point. In this case, they can keep it here. They can keep their stop loss at here and their entry at here and target at here. So this is what you should enter, and you can see the volume here. You see volume, you should go to indicators and type volume. The volume would come, and this is the volume. I have already have the volume, so I'm canceling it. So you see this is the volume here below it. So this is the volume. You can see Tata Power around 112 years, the volume is almost low. But see here at this point there is a volume breakout. You see the volume breaks out the previous level at the 2020. So starting point is 2007 and the ending point is 2020. It breaks out. So once there is a volume breakout, it means that something is good. There is something good about the stock. So maybe the company's product and service are the company's product might be coming in future. The future product of the company might be very much useful for the consumers. So some good news about the company comes, and usually the volume is higher. The buyers are so much interested in the stock. The demand for the stock is so high that they are bidding higher and higher for the stock. So you see, uh, once the body candle's body closes, and also there is a high momentum candle, and also the volumes are high. You see the volumes are so high here. So there are three confirmations for the valid breakout, and you can take an entry here or here. So if you are aggressive, you can take here. If you are conservative, you can take here, and you can take profits. You see the risk to reward ratio. Go to your long position. In the case of selling, it's short position, but in this case, it's buying. So you can keep assume you are taking entry here. You can keep your stop loss around here or here, and 1:2 ratio. You can see. So in this case, if you made a profit, if you are buying around 100 quantities, your profit is 10,660 rupees. And if you are taking a loss, your loss is maximum of 5,325 rupees. So this is the way slanting support and resistance. This is an example. This is how trend lines and the channels are formed. In the case of selling, it would be like this. In the case of selling, it would be like this. And another example is C. This is a stock known as super house stock. You see, this is the support, and once the support gets broken, it gets converted into resistance. You see, once the support gets broken, it gets converted into resistance. The support is getting broken at this point. You see, at this point, the support is getting broken, but the support is not always usually exists at the same point. there might be fluctuations. Some might go up and some points might go up. So it is better to draw it as a zone. So drawing it as a zone is known as a demand zone. In the case of support, it is known as demand. In the case of resistance, you should keep it as a this supply zone. You can change the color. So resistance zone you should mark like this. So you can connect the wicks. So if you are this, so the simple difference is if you mark it as a single point, this is as a resistance. This is a resistance. This is a resistance. But if you mark it as a zone, if you connect all the wicks together, it is known as a support. Sorry, it is known as the supply zone. So this is the difference between marking the support as just a point or marking it as a demand zone, or in the case of resistance, supply zone. So connecting the wicks is known as, so suppose if you take an entry here, you see you are taking an entry here. So this is the support point. So these are known as support points. So you are expecting the stock to come here and go again here. You are expecting the stock to come here and go again here. And so you are placing your limit order here around this point. You are placing your limit order at this point and you are keeping a stop loss here. So your target is here. Sometimes your stop loss may hit and you might face a loss. So in order to avoid this, instead of marking it, so wait 1 minute. Instead of marking it as a point, you can mark it as a zone. So once you mark it as a zone, your stop loss is usually high. So you see, this is a resistance point here, which turns into a support here. Since the resistance is broken, it is a support here. So instead of keeping the stop loss here, you might increase the zone here and you might keep here. So if you keep your entry here and stop loss around here, you might not face a loss. The stock price might come here and then go up. So you can also take your entry below at this point. You can take your entry at this point. You can also decrease your entry level. So when the stock price falls further, you can take entry below some points and your risk is also less. So you can take your entry like this and you can take profits. So around a 1:8 ratio. So this is how you can mark it as a zone by connecting the wicks. You can take any resistance and support point and you can mark it as a support zone, the demand zone. So this is the demand zone for the stock. So another thing is if the stock price is like this, you see, um, it might come, it will be like this. Wait, in this case of buying, it will be like this. So if you see, so the stock price usually comes here and falls here, or it might go here, or it might go here, or it might go here and then falls. In this case, it might come here and then go up. It might come below and go up, or it might even fall below and go up. Once it breaks below this, it is known as a trend reversal. You can watch my market structure video. This is a trend reversal point potential for the trend to reverse, but it will usually turns up if it is going in a continuous phase, but you might not know where it might come down. So this zone is a point of reversal and this zone might be a point of reversal. It might come down at any point. It might come here or here or here and it might fall down. So once if it falls here or it goes up from here, usually there is a previous support at this point. Usually there is a previous support at this level, or usually there is a previous resistance at this level. That's why the stock price goes there and comes down. So you should look at various time frames. In the case of intraday traders, they use 1 minute, 5 minutes, 15 minutes. In the case of swing traders, they use around 1 hour, 2 hour charts or day maximum. For positional traders, they usually use day, week, and month charts. So you should find the previous resistance and support points. Usually, stock price take the reversal points. So usually, the stock price begins to move, comes here, and then again falls here. In the case of selling, it goes up and comes down and goes up. In the case of buying, so usually there is a previous support or resistance where the stock price makes a major move to the upside or the downside. So this is the concepts. So this is what support and resistance means. So we have seen that what is uh, We have seen what is support and what is resistance, and what how the support converts into resistance, and how the resistance get converted into support. And we have also seen examples, and we have also seen the support and resistance also takes place not alone in a straight line but also as a slanting side. And we must also look into the previous support and resistance zone for a potential movement of the stock price in the future. And of course, a valid breakout means the candle's body must close, and also there should be a high momentum candle, and you should also look at the volume. And once better it's better to mark the support and resistance as a zone, as demand zone in the case of support, or a supply zone in the case of resistance, which gives you better entry points, and also reduces your risk. So it gives you better accuracy. And I will also bring a separate video for demand and supply zones in upcoming videos. So stay tuned for that. So hope you guys enjoyed this video. So like, share and subscribe to my channel. It takes a lot of effort to make these videos. And also press the bell icon and press the all button to get notified for all my videos. And if you want to learn trading personally, you can contact my number on the scrolling, and I will give you the details. I'm conducting trading mentorship course. And apart from that, if you want to open a Demat account, you can call me from the you can see the Zerodha link in the video description below, and you can start your trading from today onwards. So thank you guys. See you on my next video. Bye bye.